Shifting focus to geopolitical events now, 1 month has gone by since the war began. More than 10,000 people have lost their lives in Palestine, but the world watches. More than a month without food and water in Gaza, Israeli bombing hit sites across the Gaza Strip and illumination rounds lit up northern Gaza as Israel continues ground operations around the region. Humanitarian aid has been the point of attack for Israeli airstrikes. A 4-hour evacuation corridor had been opened for Gazans, urging civilians to move beyond Westland. The offensive continues to claim lives. US, which until very recently refused to back a ceasefire in the UN Security Council talks, has now asked Israel for a pause in the fighting in Gaza.
There's no hope for a ceasefire coming in from Gaza, so some somber news coming from there this morning. Let's shift focus to the east and look at China now. The International Monetary Fund raised its China growth forecast to 5.4% for 2023, while warning that real estate struggles still persist. The IMF cited better than expected third quarter growth and Beijing's recent policy announcements, while still expecting growth to slow down for the next year to 4.6%.
Shifting focus to earnings now, Swiss banking giant UBS tops expectations for profits. The bank recorded an underlying profit of $844 million. Meanwhile, oil giant Saudi Aramco profits slid 23% on lower crude prices and volumes. The drop in profitability this year has been in line with industry standards, with energy majors like ExxonMobil and Chevron seeing sharp drops compared to last year.
WeWork has been in focus since yesterday, since the company filed a suit in the US of the bankruptcy suit, and WeWork's $3 billion debt for equity swap deal with its creditors marks the latest effort by top shareholder SoftBank to revive the troubled office space provider and recoup some of the billions that it has invested. Now, whether the bet succeeds and depends on the company's renegotiating the costly long-term leases signed during the boom years. All of that is dependent on that metric. My colleague Sumita Karir filed a report that put things into perspective. Listen in.
It saw a meteoric rise with a staggering $47 billion valuation, and now WeWork, the office sharing company, has filed for Chapter 11 bankruptcy protection in the United States, claiming that it intended to trim non-operational leases. WeWork, which was once valued at $47 billion, like I said, has said that it has entered into a restructuring support agreement with a majority of its stakeholders to drastically reduce the company's debt. This filing will give it protection from its creditors and landlords as it restructures its vast debts. But amidst turmoil unfolding in the United States, how much is the India unit under impact? Well, we reached out to WeWork and it told us that the global entity and the Indian entity are two separate operations, and that the latter, which is the Indian unit, will not be impacted and business will go on as usual. The co-working space company has also said that it's backed by a majority stakeholder, the Embassy Group. In a statement, it said, and I quote, WeWork India has been profitable since 2021 and we are committed to robust growth and success of the business and the industry, unquote. It was, of course, in August that the New York-based company had sounded alarm bells over its inability to remain in business, a fallout of several factors. Number one, the demand for the firm's shared office spaces was hit after a failed attempt to raise money in a public listing in 2019. Now, that was swiftly followed by the pandemic, which actually led to many office closures, remote work around the world. Also, the costs were not going down due to inflation and slowing economic growth. Now, that impacted startups and small businesses, which are actually a part of its huge client base. Post which, the company has been scrambling to sell off parts of its business and pushing to shift to locations to renegotiate the terms of long-term leases and debts.
Well, thanks so much.